Recording in progress.
Good morning, everybody. I'll call to order the meeting of the Board of Investments. Today is Wednesday, February 11th, and the time is 9:17 a.m. The first order of business will be the Pledge of Allegiance. So, Mr. Jones, can you please start here? I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all. Okay, next we'll take care of the staff announcements.
Thank you, Chair Kehoe. This meeting is being conducted as a virtual and in-person meeting. So I will do a roll call of the trustees to confirm attendance. Ms. Ginsburg? Here. Ms. Mee? Mr. Kehoe?
Present.
Mr. Fay?
Present.
Ms. Martin?
Present.
Mr. Gatto?
Here, but barely.
Ms. Martinez? Mr. Jones?
Present.
And Ms. Langton? Yeah. Trustee Gatto and Trustee Martin will be participating remotely today due to a contagious illness. Trustee Gatto, can you please confirm if there are any individuals 18 years or older present at your location?
Yeah, I confirm there are none.
Thank you. And Ms. Martin, can you please confirm if there are any individuals 18 years or older present on your location?
No.
Okay, thank you. You may proceed with the agenda.
Great, thank you. So that covers item 3 for the teleconference meetings. Let's move on to item 4, which is the approval of the minutes of the January 14th meeting. I'll need a motion. Moved and seconded. Please vote.
Okay, Ms. Ginsburg?
Yes.
Ms. Mee?
Yes.
Mr. Kehoe?
Aye.
Mr. Fay?
Aye.
Ms. Martin?
Aye.
Mr. Gatto?
Aye.
Mr. Jones?
Aye.
And Ms. Langton?
Aye.
Passes unanimously.
Great, thank you. Our next item is public comment. We have one request from the public to speak.
It's been passed out.
Morning.
Morning.
Morning. Happy New Year, although it's a little late for that at this point, but Happy New Year anyway. My name is Jordan Fine. I'm with Unite Here Local 11, the Hospitality Workers Union in Southern California and Arizona. Last year, folks may remember that myself and Local 11 members addressed LACERA regarding the labor dispute at GAT Sky Cafe, which was owned by Atlantic Street Capital Fund 3. LACERA is Atlantic Street's largest and most consistent investor. On February 5th, Atlantic Street announced that it had sold GAT Sky Cafe to Prime Flight, which is owned by private equity firms Sterling Group and Capital Meridian Partners. The transaction marks the second time in 3 months that private equity firms have thrown hundreds of Phoenix Sky Harbor in-flight catering workers' lives in limbo. On November 4th, 2025, Sky Chefs fired about 200 Unite Here Local 11 members connected to the firm's loss of a contract with American Airlines to GAT Sky Cafe. Despite engagement by Congresswoman Yasemin Ansari, Phoenix City Council members, and Atlantic Street investors, Sky Cafe failed to commit to hiring the existing workforce of laid-off Sky Chefs workers. Numerous investors sent letters to Atlantic Street. LACERA was not one of them. At least 59 Local 11 members are now without work at Sky Harbor, and the remainder of the Sky Cafe workers have no union representation. A poorly formatted, nearly incomprehensible letter sent to Sky Cafe workers on February 6th stated that GAT is now part of Prime Flight, and workers will be required to complete required onboarding steps to continue employment at Prime Flight without providing any details about those steps. The letter also stated that certain benefits and policies may change based on Prime Flight's policies and applicable requirements. Further, claims filed with the Industrial Commission of Arizona allege that Sky Cafe and its subcontractor Aramark are liable for unpaid wages for at least 5 food service employees since November 6th. And an additional complaint filed with Arizona Attorney General Chris Mays alleges that at least 4 Aramark workers employed to service Sky Cafe have been paid below the state's 2025 minimum wage. We have now learned that at the time that Atlantic Street was failing to meaningfully engage with Local 11 to resolve these issues, its executives were in the process of selling GAT Sky Cafe and waiting to offload the dispute to Prime Flight. LACERA staff and trustees should not tolerate this kind of corporate conduct, nor should you tolerate a company that creates and fails to resolve a labor dispute, throws workers on the street, and passes off the dispute to another company. I provided a packet with documentation of all these issues, letters from other investors, complaints filed in Arizona. In the future, we look forward to engagement with LACERA staff and trustees to proactively address labor disputes and hold investment managers like Atlantic Street, which is also underperforming for the fund, accountable for failing to mitigate environmental, social, and governance risks. Appreciate it and look forward to further dialogue.
Thank you. We've received no additional requests from the public to speak. So we're going to move on to item 6, our executive update. First, our CIO's report.
Good morning, Mr. Chair, trustees. I enjoyed the discussion this morning at the Equity Committee. I thought it was lively, engaging, and I'm going to double down on some of those topics because they were in my notes, and this is what's in front of me. Well, let's begin on slide 5. So this page details results for the major capital markets through the end of January 2026. As we can see, especially in the top left, the MSCI ACWI IMI index, that's our global equity benchmark, that we have significant tailwinds. If you go back, and these numbers beyond the 1-year period are annualized returns. So to have 10-year annualized returns of 12.5% each year, talking about tailwinds, that's a gale force tailwind. And as was mentioned this morning, far in excess of our capital market assumptions over this period. Global equity was up, it's in the 1 and 3 year periods, 22.1 and 18.4% respectively. Once again, significant tailwinds, those gale force winds. Investment grade bonds are on the top right, as benchmarked by the Bloomberg US Aggregate Bond Index. The AG was up 6.8% and 3.6% annualized over those same periods, the 1 and 3 year periods. So if I can draw your attention down to the chart on the bottom, the top of it says reference portfolio, that line across, and the reference portfolio represents a 60-40 traditional portfolio of 60% equity, 40% bonds, represented by the ACWI IMI and the Bloomberg US Ag. Those numbers over the same 1 and 3 year periods would be up 15.9% and 12.4% annualized. And that's just a remarkable number. And, one way to think about it is, to take the win. If we're getting returns like that, just from, what's referred to as market beta, as represented by a reference portfolio, who cares if that's, far in excess of our capital market assumptions, take the win. And maybe the but is what's important is we cannot become complacent. So accept what that tailwind has given us, but use that to sharpen our thoughts, our implementation, and how we think about the portfolio prospectively. So here's some examples of our actions. We in fact did take the win. Dale mentioned this in the committee meeting this morning. We rebalanced over the 1 and 3 year calendar year periods. In the 1 year period, we rebalanced $3 billion out of global equity. In the 3 year period, we rebalanced $8.3 billion out. So these are remarkable numbers. And we use the balance, we use, whether we talk about it in terms of absolute dollars, 3 billion, 8.3 billion, or in percentage terms, we use that 22.1% return from public equities over the last 3 years to make benefit payments. That's what we're in the business of doing, and to fund operations. I mentioned that we take the win, so that was taking the win, but we're not complacent. And here are some examples of us not being complacent is we use those excess returns to rebalance into other strategies for when the market shifts, because markets always do shift. The problem is we just don't know when they're going to shift, and we don't know the pace of change. So that's, our primary investment belief is we believe in diversification. That is the only winning strategy long-term for us. And that really, once again, that guiding investment principle and our investment beliefs is something that we put into action each day. So let's turn to slide 8. Slide 8, thank you, shows the results for the pension through the end of 2025. We can see in the upper left monthly return net that it was a flat month. The AUM below that, or total market value, was $89.4 billion. For much of last year, as we can see in the chart below the 89.4, we went through this period from really March on, where each month was a subsequent high water mark. I think the December was not a high water mark. And I think it's really important for us to reflect upon that we didn't lose money in December. We're a mature pension, which means that our outflows exceed our inflows, such that flat isn't good enough, that we always have to be more than flat just to keep pace. And I think that shows the real challenge and the gravity behind how we allocate assets and really the importance of having that diversified portfolio. Also on this slide, the bottom middle, we could see the cash equivalents is at a healthy $1.4 billion. Important to recognize that all cash above 3 months of benefit payments is continuously invested through our cash overlay program. If we can turn to the next slide. Here we have more granularity into returns by functional category, time periods, and benchmarks, and several things jump out. And I'll start with the positive. The first is that we're outpacing our actuarial targets in all periods. That's outstanding. That's, once again, take the win. That's what we're fundamentally in business to do. That's the obligation we have to our members. The negative is the harder thing for me is that we're missing our policy benchmark for the fiscal year to date, the 1 and 3 year periods. Unfortunately, this isn't a new story. We've had consistent underperformance from private equity compared to its public equity benchmark. We talked extensively about distortions from public markets last year and this morning in the equity committee. And I went through my notes, and I'll keep doing this as I keep talking about it. 9 of my commentaries last year mentioned private equity underperformance. So this is just a consistent theme, but I think it's important for us to have it front and center as we think about our strategic asset allocation. And as was mentioned in the discussion this morning, I'm going to highlight some of those numbers once again for the full benefit of the board and those that weren't present for all the committee meeting, is that there's dissonance in that we have a good private equity program. I think it was slide 16 in the presentation that showed the peer benchmarks. And these were some of the data points from that. Our private equity program dates back to 1986, with 37 distinct vintage years. 92% of those years, we've been above the median compared to our peers. We've been above median every year since 2018. As this slide shows, the 3 year period, we're underperforming our benchmark, but in 2 of those 3 years, we've been top quartile, our private equity program. The 3rd year, we were above median. And as was mentioned this morning, our internal co-investment program is outperforming the program as a whole. So there's a lot of dissonance in terms of private equity underperformance to the benchmark, yet good performance as it relates to the private equity program as a whole. So here, we'll talk about, or I'll talk about, we can think about this underperformance in 4 potential directions. The first is cut back our private equity allocation. It's our most expensive asset category. We should expect greater returns. Private equity is predominantly blind pool risk, and in some ways is less intentional than other investments. The second dimension is, I think that Trustee Fay was reading my notes with his last comment as he was sharing the meeting, is if and only if, so that's if with 2 Fs, markets are cyclical and there's mean reversion now, it may be in fact a good time to invest in PE and not cut back, potentially increase private equity. So that's the potentially the second dimension for the board to think about as we go into our strategic asset allocation later this year. And once again, it's important to remember, and this gets to some of the questions that Trustee Langton was asking. Private equity is they're long dated investments, and that our performance today is largely driven by decisions that were made 5 to 10 years ago. So you always have to think about that there is a time shift, and that decisions today really impact, the next board, the next, 2 strategic asset allocations hence. So the third dimension or third area for us to think about is to revisit the benchmark. The benchmark is not working for purposes of measuring our private equity program, and unfortunately, the total fund in the short and medium time periods. Benchmarks are critical to make informed decisions. The benchmark currently is not that helpful for this purpose. The significant underperformance masks the evaluation of components within the private equity program. With that said, I'm reluctant to change benchmarks. Benchmarks are often changed for marketing purposes, and we don't need, as a group, to give ourselves gold stickers. We need to make hard, informed decisions given the mission that we have. But maybe we should reconsider revisiting the benchmark for measurement purposes. Our 3-year underperformance is close to 20%, and that's and it's more than 100% of the total fund underperformance. If you look at the 3-year column where it shows the total fund underperforming the benchmark, more than 100% of that underperformance is related to private equity. The fourth dimension is to rethink private equity and focus on more direct investments. That was another question asked this morning. Maybe more growth opportunities, opportunities that may not be represented in public markets, evergreen structures to find investments with built-in gains, avoid the J curve, and to be more fee aware. So the BOI should and has historically debated 1, 2, and 3 during the strategic asset allocation exercise, which will begin mid-year. Number 4, to revisit how we think about private equity, we should do regardless of the determination as it relates to 1, 2, and/or 3. The team is working on that. It's part of our charge, our mandate, and our fiduciary duty. And it's something that we'll revisit before, during, and after the strategic asset allocation with the structure review. And that's something that we're constantly doing, not just for private equity, but for all asset categories. We could turn to OPEB on slide 13.
Before you move on, Ms. Mee, I see you have your hand up. Did you have a question about this, or do you?
Yes.
Okay.
Earlier, the slide on 9.
Can we go back? There you go.
Thank you so much. So I have a suggestion on the slides. I really like, what we did in the committee meeting, have a breakdown of the functional category grow and show the performance of each, asset class under it. So in this report, we only have functional category performance. That doesn't help to see a better picture, So I would suggest, to each functional category, provide a breakdown of, asset class and the performance. I think the chart above it, I get the points, it's good. Maybe you can shrink its smaller size to provide room for that additional lines of breakdown.
We tend to have, thank you for the question. We tend to have more detail in the quarterly performance book, which is 100+ pages. While my commentary was deep, this is meant to be high level, but it's something that we can look at the formatting just to see if we can provide more granularity to the board.
I would appreciate that, because that will help us the transparency and help us with oversight. So if people ask me, how's your real estate doing? How's your private equity doing? I don't have a good idea until quarterly review. So this would help me to see it better. So appreciate that.
I agree. I was just looking at it and thinking, where's the breakdown? So I second that.
Thank you. And we can go to slide 13.
I'll just say that your previous presentation is a good advertisement and recruitment for us to be here at the board offsite, because it sounds like we have a lot of work to talk about. So.
Slide 13, OPEB is up 0.2% in December. The total market value is at $5.7 billion. This, is a high water mark, just given that there are different plans, different cash flows. Once again, it's nice to have a high water mark. Just as a kind of a hint, I looked at a flash report this morning. Our total AUM, adding OPEB and the pension, are maybe in excess of $97 billion. We're at high water marks, this morning, which is always a nice place to be. And the next slide, please. Here, once again, we have more detail at the functional asset category level for the OPEB trust. We can see that OPEB, like the pension, is above its actuarial targets for all time periods detailed on the page. OPEB does have better midterm performance compared to the policy benchmark than the pension. There's higher allocation to public equity. Private markets are in the deployment phase. So those strategies are less prominent in the numbers here. However, it is visible if you look at the 1-year period where OPEB does have some J-curve impacts. The returns also on OPEB are more similar to the reference portfolio that I mentioned on slide 5, given that this portfolio, OPEB, still is predominantly a public market portfolio. So with that, Mr. Chair, I'm happy to pause for questions.
Great, thank you. Great presentation, and I like to see our numbers because it's showing that we're being conservative and direct and deliberate in how we're investing. Any questions from the board? Anyone online? I see none. Thank you very much for the presentation, and that brings us to our member spotlight and our CEO's report.
Good morning, trustees and chair. The member spotlight is a way for LACERA to recognize the public servants that serve the constituents of LA County and to remind us of what we do and why we do it, which is to empower our members to enjoy a healthy and secure retirement. And so this month we are recognizing Cesar Huerta, who is a deputy sheriff and is going to be retiring shortly after 25 years of service. Mr. Huerta is an active shooter instructor and teaches folks throughout the county on how to deal with active shooting events, how to stay safe. And he is also a trainer, and he's most proud of training 13 deputies over his career, and some of those who went on to be sergeants. So it's always nice to see the people that you train move up in the organization. And so he is going to be retiring. He plans to travel, complete some home improvement projects, and spend time with his dog, which I love. So Mr. Huerta, Deputy Huerta, thank you very much for your service. We appreciate you.
Thank you. That brings us to the CEO's report.
Yes, good morning, Chair Kehoe. Good morning, trustees. Some brief comments on the CEO report. First, we're progressing with our AEO and Chief Audit Executive recruitments. Appreciate the trustees' engagements on a CAE recruitment. I know there's a lot of time dedicated to that. We're also continuing our efforts on strengthening our organizational and work culture, which is again a continuation from the engagement surveys that we had and focus groups. We will be sharing next month I know we shared it with the ACRE committee, the engagement survey results, but we'll share some high level, Mr. Graber and I, just on culture, things that we're doing to improve overall culture at LACERA, along with an attachment to the engagement survey for both boards. So we'll be sharing that as well. If we can go to slide 3, please. Other thing on culture, just to provide the board, I provided universal expectations for managers and supervisors throughout the organization, key leadership expectations, 5 in particular, in terms of setting the foundation on what we expect organizationally in terms of our leaders and their interaction with staff. So that will be part of the presentation that we'll provide next month as well. And then if we can go to slide 9, please. Just on our recruitment efforts, we continue to make progress. We haven't moved the needle in terms of our planned fill rate or our overall vacancy rate from last month, but internally we had some movement with internal promotions, but we continue to have focused efforts around recruitment. We meet monthly with the HR liaison, recruitment, talent management team to see where we are with all recruitments throughout the organization. So appreciate the efforts, not only from our recruitment team in HR, but also the division managers that are working through the interview process. And then lastly, if we can go to slide 12, just an update. This is a slightly revamped look at our online snapshot. One of the things that the communication team, JJ and the communication team has focused in on is just our presence related to our social media platforms. It's obviously important for us, not only for member education, stakeholder engagement, but also just elevation organizationally for prospective team members. But again, they just make sure that we're actively engaged. And then we're also not only engaged, but also responding to inquiries that we get online as well. So with that, Chair Kehoe, stand for any questions.
Great. Any questions for our CEO? Ms. Bean?
Thank you. The funding ratio, I always look at that on slide 8. That number is not updated yet, right?
No, we're waiting for the June 30th, 2025 annual financial report to close out. So we usually update those numbers towards the latter part of the calendar year. So for a sneak peek, I think we're at over 82% funding ratio.
Nice. Just waiting to see that number. Thank you.
Perfect. Any additional questions? Okay, thank you so much. I appreciate it. Moving on to item 7, our non-consent item. Item A is our real estate consultant search request for a proposal, minimum qualifications, evaluation criteria, and scope of work. We have a memo dated January 22nd, and I believe we do have a presentation.
Good morning, Chair Key and trustees. I'm Terry Rubin. It's that time again. We are going to launch our search for our RFP for the real estate consultant. Last time we did this was about 5 years ago. We will extend the current contract as we can under the contract for the time it takes to execute the search. And so what we'd like to do today is seek the board's approval for, just as we said in the title, for the search parameters. Let's go on to slide 2, please. So the selection process requires a board-approved RFP. And asking the board to do this today, we're doing that pursuant to the investment-related services procurement policy. If we can go on to slide 3. Real estate investments are characterized as core and non-core, with core real estate targeting current income and non-core real estate targeting appreciation from value creation activities. Consistent with our current process, we expect to continue to retain a single consultant to advise on the entire asset class, even though it sits in 2 functional asset classes. Having a single consultant provides efficient and effective coverage for reporting and risk analysis and the evaluation of investment opportunities. On the next slide, we provide a description of the consultant's scope of work, including strategic consulting, sourcing and due diligence of investment opportunities, attendance at meetings as requested by LACERA, and collaboration to provide ongoing advice and technical support. Strategic consulting includes assessing staff's implementation of board-approved policies and guidelines relating to the real estate portfolio and making recommendations consistent with LACERA's investment policy statement. On the next slide, we provide the recommended weightings of the evaluation criteria. The criteria have been weighted according to the contribution each will make to the relationship, with 70% of the scoring focused on staffing, client experience, investment process, and reporting. On the next slide, we provide the minimum qualifications. In addition to qualifications such as being a registered investment advisor and fiduciary to LACERA, the minimum qualifications, or MQs, require experience advising institutional pension plan clients and a combination of real estate investment vehicles over a 10-year period. Other MQs include the maintenance of a database of global investment managers, demonstrable research capabilities, and investment in technology to support research, reporting, and analysis. The next slide provides the proposed evaluation process, including the board chair's discretion to include trustees in the process. We expect staff from Real Assets and Portfolio Analytics to comprise the RFP team internally. The RFP selection authority is the Board of Investments. On the next slide, we provide a timeline for completion with a goal to make a recommendation to the board in early fourth quarter of this year. And on the next slide, we wrap up with the recommendation for the request for the approval, which we recommend of the proposed minimum qualifications, evaluation criteria, and scope of work. If approved, we will meet with Chair Kehoe on next steps to launch and review the RFP.
I'll make a motion.
Okay, I do have a question, but I could take your motion. You want to make a motion?
I just did, yeah.
Okay, staff recommendation, do we have a second?
Second.
Second, moved and seconded, Ms. Mead.
Oh, thank you. Go to slide 4. Thank you. I just want to point out there, I'm not sure if it will be misleading in the sourcing due diligence here, conduct independent evaluation and provide concurrence memo. So I just want to say out loud there, as consultant, that independence evaluation is really important. So it's not just to say, provide concurrence, say yes to everything that our investment team conclude, but provide a perspective. And it should be, you should be okay to say no if you see differently, and that's the value that you bring into the team, you know, if you see different perspective. So just in case it's misleading in this line here, not just saying yes to everything, basically. So
And just to clarify from a staff perspective, a concurrence memo is issued if they concur with the recommendation, right?
Yes.
And then they would not do that if they don't concur.
thank
Yes.
you.
Yeah.
Thank you for clarification. Slide 7. So Chair, you know, I do think this is for the trustee included in the RFP process. I think is meaningful because consultant has 2 jobs, you know, consultant work with the staff, you know, and then reports to the board. So I feel like it's meaningful, you know, they have one of us sit there and then select a consultant. I will recommend that.
Perfect.
And if you need someone, I can volunteer.
Yep. Once assuming the motion passes, we'll definitely be surveying the board for those that are interested. Okay. Additional questions? I see none. We have a motion on the table. Let's vote.
Okay, Ms. Ginsburg? Yes. Ms. Mead?
Yes.
Mr. Kehoe?
Aye.
Mr. Fay?
Aye.
Ms. Martin?
Aye.
Mr. Gatto?
Aye.
Mr. Jones?
Aye.
And Ms. Langton? Aye. Passes unanimously.
Perfect. And Linda will be sending out an interest email, and we'll make sure, obviously, we got to keep it under a quorum. So
Thank you.
perfect. Thank you so much for the presentation. Moving on to item B, which is our 2026 election for the 2nd and 8th trustees. We have a power and duty statement that was dated February 5th of 26. I'll make the motion for adoption.
A second.
So moved and seconded. Any discussion? Hearing none, let's please vote.
Ms. Ginsburg? Yes. Ms. Mead?
Yes.
Mr. Kehoe?
Aye.
Mr. Fay?
Aye.
Ms. Martin?
Aye.
Mr. Gatto?
Aye.
Mr. Jones?
Aye.
And Ms. Langton? Aye. Passes unanimously.
Great, thank you so much. We're moving on to our reports, and we're going to have a report on the private equity investment process overview. So we'll get them set up.
Morning, Mr. Chair and trustees. It's our second presentation today. During the November 2025 Board of Investments Committee meeting, trustees asked for a review of the private equity investment process. Today's discussion will focus on the investment process. Slide's not moving.
Deb's controlling it.
Oh.
Deb, can you go to the next slide? Or-
Could you please go to the next slide, Deb? Today's discussion will focus on LACERA's private equity investment process, specifically related to fund investments or primaries. We'll cover how opportunities are sourced, screened, and advanced through our diligence process. And we'll highlight layered oversight by staff, the Staff Investment Committee, and LACERA's private equity consultant Stepstone. Ultimately, we'll demonstrate how the diligence process is reflected in our Board of Investments notification memos. Next slide, please. The investment process starts with the Board of Investments, who sets the policy, the strategic direction of the private equity program, defining its purpose, scopes, and limits. If you take a look at the investment planning and strategy section of this presentation, the Board of Investments approves the investment policy statement, sets the strategic asset allocation, and reviews and approves the structure reviews at the functional asset category level, which include investment guidelines. Together, these three documents set our target and set the parameters for staff to operate within. Our discussion today will focus on manager assessment and due diligence, as well as approval and execution. And we'll go into more details on some of those sub-bullets in the next slide. Finally, is there a way that I can control the slides, please? Finally, on a post-investment and monitoring basis, we take a look at performance after an investment has closed. We attend annual meetings and limited partner advisory committees. And we take all of this information and distill it down to the board, or distill it up to the board, excuse me, through quarterly manager scorecards. Next slide, please. Our manager assessment and due diligence process starts with sourcing and opportunity prioritization. Opportunity prioritization is sometimes called pipeline management. LACERA sources opportunities through multiple dimensions, including database platforms that allow for opportunity screening and market mapping. We're proactive and we do direct outreach to general partners that we may not know, just so that we can understand their strategy and have them in our market maps. We work with intermediaries, which include placement agents and third-party advisors who can make introductions to funds that we may not have relationships with. We also have a LACERA email where we receive several inbound inquiries through new opportunities at lacera.gov. And we work with our strategic partnerships such as Stepstone, Hamilton Lane, JP Morgan, and Pathway to make manager introductions and also to have conversations at a high level about manager strategy. Once we've canvassed the market, we look at our investment pipeline and we elevate opportunities that demonstrate good strategic fit and alignment with LACERA's private equity program. We also triangulate three items: the timing of close and whether it closes within the calendar year that we're looking for, the size of the fund and whether or not we can make meaningful commitments to the fund that would align our partnership with the general partner, and the team's underwriting capacity to take on an incremental manager. Once we've identified these areas, a manager is elevated to the private equity team discussion. Next slide.
Before you go on, I'm sorry to cut into it, but I know this is going to leave my train of thought. So you talked about elevating and identifying. What is that process like? A new opportunity comes in. What's the process to identify and elevate to the sit down and have a conversation?
Absolutely. So everybody has coverage, and their defined coverage allows them to evaluate a manager. If we receive an inbound email, for example, we ask for an investor presentation that includes net performance figures. This investment presentation includes strategy, performance, team, and some of the items that we'll look at in the next slide of the 6 dimensions that we evaluate. If there's interest there and the timing aligns, someone from our team will go to our weekly team discussion and say, I'd like to bring this opportunity into our pipeline. We review our pipeline weekly internally and every 2 weeks with SEPstone so that we know how diligence timelines are panning out. Additionally, when we start the year, there's a planning process that usually starts somewhere in November of the previous year, where we list out the priorities and the funds that we'd like to look at for the upcoming year. So it's intake, evaluation, discussion, and then planning.
Yeah, so the evaluation process is whoever has coverage for that period is looking at that opportunity and says, yes, I'm willing to put my name on it and bring it forward to the bigger group to have a conversation.
And
That's the initial.
and actually, it's a fantastic segue to the next slide, if that's okay.
Okay, yeah, I do have a second question, which is the how many requests we get from the new opportunities at LACERA.gov
I'll have to
on an
come-
average basis. And I don't expect to have it off the top of your head, but it'd be interesting, I think, to our board if we know how much, how many of those kind of come in on a routine basis.
I'll come back to you with the figure.
Perfect.
If we go to the next slide, please. The discussions and evaluations that we have center around these 6 criteria. So to your question, we'll discuss team, performance, portfolio construction, investment process, strategy, and terms and economics. And while we have a very high level overview of those 6 dimensions on this slide, the conversations are extensive, both at the team level, the investment committee level, and through ongoing diligence. And they feed into, next slide, please.
Actually, I think you have control now.
Oh, great.
Hey, Didier, real quick. Before you get to this level, the person who has coverage, they haven't talked to anybody, right? We typically encourage a potential lead, send us your presentation, and then the initial evaluation made before bringing to the committee for potential conversation is predicated off the deck, for lack of a better word. Is that accurate to say?
So I can talk about my own personal coverage, which is venture capital and growth equity. If someone sends me a deck after I've requested it, I'll review it and compare it to all the other opportunities that may be at the same time. If there's something that's interesting in that presentation, I'll have a follow-up conversation with the manager and ask them questions listed on this page. I want to know about their strategy. I want to understand if there's any differentiation, and I want to understand if it's additive to our portfolio. If it checks all these boxes in our team conversation, when we are discussing what's going into the pipeline and potentially what month we may target to close, other team members may ask questions like, oh, I noticed that we have a manager that looks very similar. How is this manager different or additive?
And the main reason I'm asking, just for transparency's sake, is that I think you and I have had conversations before that occasionally managers who go in through newopportunities.com, hey, I haven't heard anything, right? And, so we, being out in the public, you oftentimes will touch base with them. And so is it accurate to say that, hey, if you likely haven't heard anything, it's because our initial coverage didn't determine that you made it to the next level? Would that be a fair piece of feedback for them?
Let me answer it this way. So, and this may touch upon some of your questions, Chair. In any given year, our team looks at 200 opportunities, meaning we've had manager meetings. We've had 200 manager meetings collectively. Some of us have a little bit more, some of us have a little less, and every year it varies. Not all of those meetings translate to next meetings, nor do they translate to commitments. If we do 10 commitments, that means there's a 5% acceptance rate of that 1 year. However, most of our conversations take place over 18 months to 2 years. So we're having 300 to 400 meetings, meaning an acceptance rate of 2.5%. Of course, we're not going to be able to get to everybody, unfortunately, but we try to. And opportunities that may not fit us because of size or because of stage of lifestyle go to our emerging manager program, where we also have biweekly pipeline calls to discuss meetings.
No, perfect. Thank you. I just wanted to be able to give them an accurate reflection as to where they might be in that consideration process. So thank you.
So the coverage is based on their area of expertise, not based on like, hey, I'm up this week and I'm reviewing. It's it's based on area of expertise. Okay, and then as far as tracking, do we track all incoming requests and keep it in some sort of database and then see if it moves on to that next level and all of that stuff? To Mr. Jones' point, if somebody says, hey, you know, I got a complaint, I've been trying to get this in and nobody's listening to me, are we able to?
All opportunities that go to new opportunity that go into our inbox are tracked,
Okay,
and we have follow-up for them. If it's my individual coverage, I tend to say, it's not a fit at the moment, but please keep in touch and send periodic performance updates. And that way we can continue to have the conversation. And it may be a case where something is in the pipeline, it may not have been in the pipeline this year, but 2 years later, we've kept in touch and things have changed at the manager level and we ultimately end up committing.
If I'll say something that the team probably can't say or won't say. We, I think, have focused on trying to get better at responding to everyone. We now have an automatic response to everyone that emails that this is the process, this is the timeline. There are managers out there, believe it or not, that aren't happy with an answer. We give an answer and they're not necessarily obligated when they see me, when they see someone on the board to be as forthright about, I haven't heard back. Maybe they haven't heard back the answer that they want, but we try and we'll always try to improve how we respond to firms. But I think that many firms try to keep pushing until they get the answer that they want.
yeah,
Thank you, fairly said. I appreciate that.
Actually, that leads to my question. How do I say this nicely? If we know, it's like Didier, the way you just talked about, you want to make sure people know that you've seen their stuff. If we know that everybody has been seen and has been responded to, and then someone comes to us saying they haven't heard something, then that's an indication for us to know that they're not being forthright. And it's good for us to know on that side too. I just want to make sure the way that you're talking about how you do your coverage, is that how that's a policy about how everyone does it.
Mm-hmm.
And if not, how to make it be the case so that I want to know if someone's lying to me. That's my point.
Yeah, that was literally my next question I was going to ask, was going to be, is this a defined policy? Everything that we're being presented to, do we have it written down that this is the process and that's what everybody does?
It's not a policy, but it is part of our procedure for specifically any of the inbounds and new opportunities at LACERA to respond back to managers.
Okay, so our manual policy and procedures is the same thing. So from one, in my language, a policy and a procedure is something that's written down. That's what you follow. So is it actually written down, or is this a trained thing that we do?
Let me get back to you on that.
Okay.
Specifically.
Okay. Yeah. So I would encourage staff to consider, this is great. I mean, there's nothing bad with this. It's all good stuff. I want to be consistent and fair across the board with blinders, right? So if this is what we're doing, let's write it down. Let's train it. Let's make sure everybody's doing the same thing. My only concern of anything that I've heard is just the coverage aspect on it. It's very dependent upon an individual to review an opportunity and make a decision. And I get that we're going to have to be there, that there has to be somebody at the gates, right? But let's try and make it as fair and equal across the board as we can. I think we do that by writing out a policy and making sure we're all consistent.
Can I add one more thing to that, please? From a time perspective, every time someone comes to us and says, hey, I haven't heard back, and you say, we come to you and say, hey, why have you gotten back? And you say, we actually have. That the time it would take, that extra time it takes for hearing that back and forth could be mitigated right up front. But like, did you not get an email? And then if they say, no, we got an email, well then that's stopped at the point. So you don't hear from us saying, hey, look, has this person heard back?
Thank you. You can continue on, sorry.
Great. So once the team has elevated an opportunity, it goes through our approval and execution process. which starts when a fund is submitted to our investment committee. Our investment committee has 3 phases, each which build upon each other, and they surface risks and lead to further analyses, both on a qualitative and quantitative basis. Parallel to our investment committees, Stepstone is performing independent due diligence with their own investment committee and their own approval process. Prior to any fund going to CIO approval, LACERA's investment committee must have voted to advance it to the CIO. It means it's passed 3 investment committees. LACERA's legal department had to have reviewed all of the legal documents and signed off. And Stepstone has had to provide its affirmative assessment of the manager. Given that our investment committees are such a big part of, next slide, please.
Before you move on, I have missed me.
Thank you, Chair. Thank you. The 2 presentation, you should reward it for 2 lunches, maybe. Question on this slide, step 5. So the time in the reported board, I understand that, a year before I joined, we have a delegated authority to our CIO and the team. And then we are blessed with excellent team that you guys have been making prudent decision and the performance figure out loud, right? However, on the board, our job still trust but verify. Right, so I would humbly suggest to move, the board reporting in parallel, if not like at the end, before at least before signing the fund, so that giving trustee a chance if anyone have any concern at all to adjust that. So in the past 2 years, I usually heavily feel concerned, but here and there I have some. And then I think, given a chance to raise those concerns, if there's any, and address them before signing the form would make that trust but verify much more meaningful. And then personally, it will give me more peace of mind. But you know me, I generally don't have a lot of questions here and there, minor comments. Yeah.
Can I ask that we direct staff to look into what was just said, evaluate it, and then bring that back to the board? That's a big decision, right? To get in the middle of a decision-making tree. Yeah, so, yeah, I mean, I personally might have some concern over, but maybe there's a way that we can work this out or not. But I think it's best that staff takes a look at those comments, evaluates it, and then comes back to the board with a recommendation or an evaluation of the process.
Thank you, Chair, for that comment. I think it's appropriate. What I want to clarify is that it's not for asking for the board approval. We have delegate authority, but just given a chance for trustee if there's any concern at all. So you guys have been always doing a great job addressing any concern I have. So it's just like make it a little bit more peaceful when I know that it's not yet signed.
Thank you. We can move on to the next slide, please. The investment committee process is important to our overall approval process, and a lot of thought went into designing the investment committees. Staff evaluated other fund managers and our peers to see which investment committee structure would work best for us. And while we have growth investment committee on the slide, all functional asset category committees look very similar. There are permanent members, there are rotating members, and the deputy CIO that sit in the investment committee. One nuance is that our rotating members come from other asset categories. And given that capital markets are tightly intertwined, we get to learn from their perspective on similar touch points on investments that leads to rich discussions. The permanent members of our investment committee are the global equity team and the private equity team. Together, we evaluate the merits of an investment. We debate the risks and surface concerns. We assure alignment with LACERA's policies and structure reviews, and ultimately decide to advance or not advance opportunities to the CIO. Next, we'll turn it over to Derek. Next slide, please. We'll provide an illustrative example of a board report. You'll go over 300 North Lake Partners, which is a hypothetical fund based in Pasadena, which closed their most recent Fund 5. So you can see how information from our process is distilled and ultimately reported to the board.
Morning. Good morning, trustees. Before we walk through the hypothetical fund, I wanted to emphasize 2 points. First, this format should be very familiar with trustees. We used this in all our BOI memos. not only for private equity, but across all asset classes. Secondly, while this hypothetical example is distilled into roughly 22 slides, each one represents months and sometimes years of underlying analysis, data collection, and ongoing engagement. What you're seeing here is a distilled version of a much larger body of work. Next slide, please. Next slide. So we begin with a fund notice and overview section. This is a high-level snapshot of who the manager is, what they do, our commitment size, and their historical performance. It also confirms that StepStone completed independent diligence and issued an affirmative recommendation. Next slide, please. Before we commit to capital, it is important to understand how the relationship developed over time. This timeline here illustrates how long we've known the manager and the steps taken before making a commitment. As Didier said earlier, most managers remain on our radar for several years before we invest. The chart below outlines the milestones, including when we initiated the dialogue, began formal diligence, received StepStone's independent approval, and obtained CIO sign-off. This demonstrates a deliberate and measured approach to private equity due diligence. Next slide, please. The chart on the left compares the manager's current exposure against the target ranges for geography, investment vehicle, and sub-asset class, which is based on our BI-approved guidelines. The chart on the right shows how the investment FX sector exposure relative to our public benchmark, the MSCI ACWI IMI index. Next slide, please. Next, we evaluate how this manager's strategy aligns with the existing managers in our portfolio. This comparison allows us to identify the incremental value the manager provides and informs our decision on whether maintaining or increasing our exposure is appropriate. The goal is to ensure that every recommendation is beneficial to our portfolio and it exhibits appropriate portfolio fit. Next slide, please. Next slide. This slide discusses the structural review considerations. When we make our recommendation, our goal is to have the board approved implementation attributes given in the structural review reflect the attributes we observe in the manager in every fund we recommend. The left part of the slide outlines the desired implementation attributes taken directly from the 2024 board approved structure review. Starting on the top, there are 3 desired attributes for PE, namely scaled investment, structured partnership, and excess returns. The gray shaded middle shows the shared attributes between private equity and global equity. And the last 3 in the bottom are desired attributes specifically only for global equity managers. As you can see on the right side, this manager or hypothetical manager possesses all the attributes we look for in private equity, as well as all the shared attributes we look for both PE and growth equity. For example, on the PE side, the large commitment relative to the fund size allows us to scale this manager appropriately within the program, allowing us to exhibit scaled investments. Our LPAC seat strengthens governance by giving us a vote on key stewardship matters, leading to a strategic partnership. And the manager's track record indicates a potential to generate excess returns. Next slide, please. With portfolio fit established, we now turn to the manager itself. Here we get an overview of the organization, its headquarters, its headcount, and its assets under management. The purpose is to confirm the manager has the scale, infrastructure, and institutional maturity to manage our capital over a 10-year life. Next slide, please. Equally important to our assessment is the investment team. We evaluate tenure, stability, and whether key professionals have worked together across prior funds. Team continuity is critical given the long-term nature and duration of these commitments. We need confidence that the individuals in place will be responsible for deploying our capital will remain in place throughout the life of the fund. We also assess the investment committee's composition and decision-making process to ensure it reflects sound leadership. Next slide, please. As part of our review of the organization, we assess DEI practices. This includes DEI policies in place, workforce demographics, and areas for improvement. Our diligence is rooted in the board-approved investment policy statement. We're transparent about the strengths and gaps in this regard. This reflects our commitment to evaluating human capital management comprehensively across all our partnerships. Next slide, please. Now we turn to what the manager actually does. This slide describes the investment strategy, the types of companies they look for, the entry and exit mechanisms, and any points of differentiation. Next slide, please. Alongside strategy, we evaluate how a manager identifies and manages financially material ESG risks in alignment with our investment policy statement. We want to understand how they integrate environmental, social, and governance factors into their investment process. We document their practices, note any gaps, and explain what mitigants exist. And finally, we assign an ESG score summarizing strengths and areas for improvement. Next slide, please. Here, we present the manager's track record, reviewing fund-by-fund results against peer universes and public market benchmarks. Because each metric captures a different dimension of performance, 3 of them are listed on this chart, including net IRR, net MOIC, or multiple investment capital, and distributions, or net DPI. Located right beside it is the quartile rankings, offering additional context on how the manager has performed relative to its peer group. Finally, the below chart is a public market equivalent analysis. This compares what an investor earned in a private equity fund versus what they would have earned investing the same dollars in a public market index. A PME above 1.0 or a direct alpha above 0% both indicate the fund outperformed the public market index. Next slide, please. After we evaluate performance, we summarize the strengths and merits on this slide. Here, there are 5 hypothetical strengths and their respective merits backed by data and analysis. These factors combined support our decision to advance the investment through diligence. Next slide, please. Slide 23 is where we spend most of our time. This slide reflects the depth of diligence behind each recommendation and our full assessment of the risk involved. For each concern here, we document our findings on risks and factors that mitigate it, whether they stem from manager actions, reference calls, or our own financial analysis. In terms of mitigants, we identify and verify information rather than relying solely on a manager's explanations, including through conversations with other sophisticated limited partners and a review of the underlying portfolio company data. When a materialist cannot be sufficiently mitigated, we do not advance their investment. Any recommendation that reaches the CIO has already passed 3 internal investment committee reviews, each involving a detailed assessment of risks and mitigants. Only investments that clear this high level of scrutiny move forward. Next slide, please. Beyond investment risks, we in StepStone also assess operational risks such as compliance, cybersecurity, cash control, violation process, and business continuity. These checks help ensure the manager has the infrastructure needed to responsibly manage our capital. Next slide, please. Another way we evaluate a fund is through the lenses of the board's strategic framework and initiatives. This slide shows which strategic initiatives the recommendation supports and how it aligns with the broader goals of the said initiatives. Next slide, please. This slide was created specifically in response to a trustee's request to make it easy to verify that each recommendation complies with all board-approved parameters. This includes the corresponding allocation ranges, concentration limits, and prohibited investment types. This concludes the overview of our diligence framework. As one can see, every investment follows the same process: relationship building over time, multiple internal investment committee votes, independent consultant review, and final CIO approval. Post-closing, we monitor managers quarterly through our manager scorecards, which track performance, organizational development, risk metrics, and emerging areas of concern. These scorecards feed directly into our ongoing oversight, pacing decisions, and re-underwriting decisions. Finally, the memo we just showed to you consolidates all our findings, analysis, and recommendations into a consistent format designed for clarity and comparability. We believe this approach reflects the rigor, consistency, and alignment with LACERA's mission to produce, protect, and provide the promised benefits to our members. With that, we're happy to take questions.
So very important question. Did we sign with the 300 North Lake Fund 5?
Yeah.
Any questions from the committee or from the board?
Yeah, I think I'll add one commentary, and I can't remember, Sean, if were you on the BOI in 2020, 21, the delegated authority conversation came up?
Yes.
Okay. So partly just for the historical purposes of it is a couple things. One is for a fund our size, even then, which was 60 billion or so, we were one of the way outliers of funds that size that did not have delegated authority. So the fact that we were still voting made a fund of our size put us somewhat on the short bus compared to what other funds were doing. Number two, then the process that we saw here was an important part of the conversation. I know between Gina and David, I think Sean, you were even in those conversations, David Green, Gina Sanchez, that the delegated authority wasn't just an authority given to the investment staff. It was given to a detailing of a process that as a board, we could hold them accountable to over and over again, right? That if we understood what the process was, then what we knew is every deal coming through went through this thing. So the delegated authority was basically an approval of the process that you saw in through here. So I just wanted to give a larger context. I can understand why if you're new, because I was new at the time. I was like, oh, okay, well, if we're not voting on deals anymore, like what use are we? Right. But also part of that context too, particularly as I think it related to the private equity program, was that as we got larger and we were pursuing relationships with the best managers, our process of having board meeting review and participation was unduly slowing down the process, and we were missing out on opportunities. So just to kind of give a full background on that. So I appreciate kind of seeing it again in detail and appreciate that.
Yeah, concur. And it was definitely difficult for the board at the time to grant that delegated authority. But I think this process and what we're seeing is that it's being successful and it's being done right. And we still have oversight of the entire process. So, but we do have some good takeaways. This was an excellent presentation, by the way, especially for me coming back onto the board. So I really appreciate this. And I picked up a lot. Any additional questions?
I'm not sure if Mr. Gatto.
Mr. Gatto, did you have a question?
I did. Thank you so much. I'm having a hard time raising my hand, and I apologize if I sound congested because I have a very bad cold. But I have a series of questions. I guess the first one is, how are these investment procedures different from the procedures that were in place before the delegation of authority that occurred in, like, I want to say November 2024 or 2023?
This is new, that all of this has been put in place. We had, Mr. Gatto, we had investment committees, but one of the things that we did was we sent a team across asset category to visit with a variety of asset managers, general partners, other institutional investors to learn what their committee structure was like. And we put in place charters for all the committees. We debated what the committee structure would be. And what wasn't really discussed is for all aspects of the diligence, we've come up with standard due diligence questionnaires. So there was, I think that there was a lot of overlap, and the process today may rhyme with what we did pre-delegation, but towards what Chair Kehoe was talking about earlier about how we respond to third parties, this is night and day different in terms of the sophistication, the level of discourse. I would say that the biggest change is that there's a sense that everyone owns the outcome and that everyone has a vote. I think it's rare to find any investment organization where every person on the team has a vote. And I don't have a vote. I only have a consent right at the very end. Everyone else has 3 votes before it gets to me. So I would say that this is a much more diligent process, a much more thorough process, a much less random process than we had before.
Yeah. Listen, I feel your pain, John, because the trustees don't have a vote either. agree with what Trustee Mee said. I would like to try to come up with some sort of mechanism that involves the trustees more. From my perspective, this big paradigm shift occurred right before this current board, took office. I think I'm not sure that there's too many people on this board who are present for that delegation vote. And I echo everything that Trustee Mee said. I mean, we have the finest team here. This team here is so good that, you guys are almost legendary in terms of your reputation out in the community. And it's an honor to be part of, such an esteemed group of people. But whenever I go back and I read the statutes and, the Constitution and the duties that are placed on us as trustees, I am mindful of the fact that we are supposed to exercise, significant oversight. And then secondly, having been a veteran, I was in the legislature when the great financial crisis hit, and there was a lot of decisions that had been made at CalPERS and CalSTRS, but nobody pays attention until something goes wrong. And when something goes wrong, they ask the appointees, well, what were you doing? They ask the trustees, well, how come you didn't exercise, your constitutional and statutory authority over that? So I just want to make sure, just because, it is our butts on the line. It is my butt on the line, at least personally, right? I take my role very seriously. I just want to make sure that we're participating in what the drafters of the statutes intended. So if there's any suggestions you can make, I echo Chair Kehoe's suggestion. If you could perhaps come back with something that is designed to at least make us feel like we have some greater oversight and participation, all the while respecting this process, because this is a very, very good process that I think you've outlined, then I would appreciate that very much.
Mr. Chair?
Please.
There's just a couple of things, and I want to respond to kind of the undelegation discussion. Just as it relates to the new opportunities inbox in 2025, we received 137 emails, 15 were for private equity, just to put that in perspective. And I want to be responsive to the board's discussion about, changing a process. That process was a year-long process that didn't involve staff. That was initiated by the board, involved fiduciary counsel, involved the board or LACERA's general consultant. So in some sense, maybe it's worth a refresh from fiduciary counsel, from the investment consultant, because in some sense, me saying something, well, I'm arguably conflicted. I think that it's somewhat of a disincentive in terms of excelling and trying to, we talk about strategic initiatives, we talk about frameworks to be best in class, to morph from going back from being best in class investor to procurement officer, just is kind of a different mindset than what we're trying to build, recognizing that we all take our fiduciary duties beyond seriously. But I would recommend that we revisit the process, that year-long process that led to the creation of guidelines, reviewing all policies, and as was led by Makita and fiduciary counsel. And maybe this dovetails, Mr. Chair, into the strategic governance review that's underway. That's a year-long process for this year. So I don't think that we can have an answer for Ms. Mee or Mr. Gatto next month. I think that's difficult. I think that maybe this is something that is folded into the larger framework of what's on the agenda for the year.
Yeah, yeah, please.
Yeah, I don't want to stifle you. I mean, I think we're doing great. I want to make sure that you are comfortable with I know we're the ones on the line. I don't know how many times a trustee has called you on, hey, I don't think this is a good idea. Does that happen? Has that ever happened?
Ms. Langton, I've received calls from trustees with questions about clarifications. I would say prior to delegation, trustees were very involved in the investment process. And it directed, in many ways, our business partners. Because I think to the extent you're making a presentation, in some sense, if you're spending months or years trying to get to yes, and someone says you should open this door, I think candidly, it did influence the universe of business partners that LACERA had. I think that it's much more neutral now. I think that the investment process today is better than I've seen it. And I think that no one person, staff or trustee, overly influences any one decision. So there's no one person, then other than the lead analyst who's spending the time on it. But we've had lead analysts in committee say, you know what, I no longer support it for this reason. And we just have stopped looking at opportunities. Because if the person who knows the most isn't supportive, obviously no one else should be supportive. But in prior instances of LACERA, yes, there was influence.
Mr. Jones.
Yeah, and I would also say that the 10 years of underperformance that we had within our real estate asset class, if I could be so bold, was almost directly correlated to the over-engagement of trustees along with the staff group in that. So we weren't getting professional level decision-making over the course of that. So I'd hate to see us go back to, and at the end of the day, as engaged as we are, we like to think that our butt's on the line. And perhaps, Gatto has a superpower I'm not aware of, but it's just like, we're just not going to be able to trounce the day-to-day expertise of the people that we've collected here on this. I know I ask questions all the time. I consider myself a little bit more of a nerd, but it's more of just like a question. Just, hey, I'm relying on you guys to be the experts that you are, but hey, can you help me better understand this? But I don't think to suppose my whatever reservations or feelings that I may have about something over the staff. And then I think secondarily, our oversight over the process, frankly, is our oversight over John. So if at some point we ever feel like things aren't going right or doing whatever else, we have the direct responsibility to say, hey, John, you're not cutting it or doing whatever else, and then we replace them at that stage. And then thirdly, if I could, Chairman, Tim, I think you were part of the lead on the movement to delegated authority. Could you give us like a 3-minute, 4-minute summary assumption? I know I flippantly used the short bus comment before, but just us as a group heading towards $100 million. And when you look at best in class funds of that size, how are they structured? I know that was part of the conversation that took place there too. Would you should also provide some for the benefit of our newer board members here?
Sure, through the chair, if I may. So when we did the review several years ago, it was part of the process of going from allocator to institutional investor and taking a deep dive at what other plans, not just in your local neighborhood, look like, because I know there's a lot of networking amongst all of the California plans. There's a lot, you're obviously in a separate category as far as county plans. You're far and away the largest in the country, never mind how you rank in the state of California. So we looked at a peer group that was basically plans that were 50 billion at the time and all the way up. We looked at plans not just in the US, but globally. There are lots of different models. I think a lot of people have heard about the Canadian pension plan models. how those are different. I mean, they're more or less set up like fully separate institutional investment entities that have what looks like more corporate board that's filled with experts in the space to provide oversight, but the investment organization functions completely separately. So we outlined all the different governance models that existed and then looked at what the practices are for delegation, not just any specific asset class, but across the board. So the overall high level punchline from the findings was that plans that were larger than you, I think the number was roughly 75% of them had fully delegated authority and had delegated authority basically for a decade or more. We tried to look back at when they instituted some of those policies. That got a little bit more challenging. But that was the basic punchline. The vast majority of peer plans within the United States, without sort of pursuing the more aggressive Canadian type models, had fully delegated authority and had it in place for some time. When we looked at some of the more regional peer plans and plans that were smaller, as you would expect, there was more or there was less delegation, and you can directly equate that to really the size of the assets at those organizations. If you're a plan that's, let's say, 20 billion or 5 billion, you're not able to hire a fully professional staff of 50 people to review all of these complex asset categories. And so I think that sort of development of LACERA's staff, the sizing of the staff, the amount of the assets pointed in a very clear direction at the time.
Okay, I have a question from Ms. Langton, followed by Mr. Gatto.
Yeah, I just have a comment, actually. Mr. Gatto, I completely understand where you're coming from. I'm an attorney. I feel the discomfort. I was very uncomfortable when we first got here, but after having been here for a little over a year, I feel like it's far more responsible as a trustee to allow the experts to make the decision. I think, we have our questions, we can ask our questions. I feel like if we want to know something ahead of time, we can reach out to John. He's always accessible. I just think we're doing the right thing. We're being responsible trustees. After hearing the process today of how much is gone through, how could I second guess that? I couldn't second guess that. I don't care who you are. You're not as good as 15 people looking at it. So I just wanted to add that.
Mr. Gatto.
Thank you. I appreciate that. And, to address a comment that I believe one of the other trustees made, I mean, Gatto doesn't feel like he has superpowers, but Gatto can read statutes pretty well. I guess I would ask some rhetorical questions, and those would be, if the trustees don't have any role other than setting broad categorical guidelines, then why do trustees exist? The second question I would ask is, have my fellow trustees polled other trustees and other comparable sized pensions to see what those pensions do? And could it possibly be that we are an outlier amid, most of the pensions out there? And the third question that I would pose, just for food for thought, is, to the excellent staff that we have. The excellent staff also has people who are very, very brilliant, who are involved in the process. For example, the consultants. But when we talk about fiduciary duty, which is something that all of us take very seriously, and I think John said it best when he said, we take it more than seriously. Just like staff would not delegate their fiduciary duty to an outside consultant, just like they would want to be involved in the process and they would want to double check and they would want to have something greater than just hey, this is the rocket's direction, we're going to launch it, but we can't guide it at all. I think that's how I would sum up that I feel as a trustee, because we trust the consultants, we trust the staff, but fiduciary duty is not something you can delegate completely. And, or I would ask, who here would feel comfortable just saying that, well, we're going to, a consultant's going to handle everything. So those three questions are what's guiding me. What are comparable pensions doing in California? What are You know, what are the feelings about delegating fiduciary duties completely? And why are trustees a feature of every pension? And why did the people who created these schemes, why did they draft the statutes and the rules the way that they did? And I think if you consider those questions, which are not just rhetorical, and you consider the answers, I come to a conclusion personally that we need a little bit more oversight than what the current system is. I mean, I don't know what that looks like, but for the first, you know, almost 100 years of our existence, we had it where we exercised direct oversight. I would submit there's a reason for that, and now it's gone quite far in the other direction. So just personally, you know, as an attorney, as someone who takes my fiduciary duties very, very seriously, that's my opinion. And I can tell there's differences of opinion, but that's good. It is good for the board to have differences of opinion. When a board is just, everything is unanimous, that means that we're not paying attention. So I welcome these debates and I encourage them completely.
Thank you. So I've been quiet and listening. I'll give you my thoughts on it. So nobody, I don't think anybody here is asking for the organization to take a step back. So we're always looking at taking a step forward. And when you have best practices in place, you should never be concerned about questions or picking up the carpet, looking underneath it and looking at things. So we'll frame it around that it's definitely good and healthy to have the conversations, look at things and see how we're doing it and compare it and look at that. And that's frankly what brought us to where we are today. Because if we didn't do that, we would still be back in the decision-making tree where trustees are approving private equity investments on an investment by investment scenario, right? But we've grown and we've gone to that. Perhaps we've delegated too much. Perhaps we've not delegated enough. We don't know the answers to that. Those are all important questions that we should look at. And like I said, shouldn't be afraid of evaluating and seeing what we're moving with. Ultimately, this board, the trustees have ultimate authority, right? We could put on the board agenda, next board meeting, 100% asset allocation to cryptocurrency and vote on it. You get 5 votes. We could do that. Now we'll all end up in federal prison, you know, but at the end of the day, we have the authority to do that. That doesn't mean that that's the best decision, right? And as somebody who has 2,000 people that worked for me, I don't go down and get into an individual courthouse at an individual jail and tell the deputy what to do. I set the policies and I expect the multiple levels of managers underneath me and supervisors to make sure that that job's being done, right? Because ultimately that's my job in that role. And the trustee's job, my opinion, is to be oversight and set the directions and the policies, right? But you absolutely can over delegate. There's many of organizations have done that and gotten themselves in trouble. I'm not saying that that's where we are today, but I do think that a healthy look at and an evaluation and everything is important. And I expect that that's what's going to happen in this offsite, right? So I think that in the offsite, when we're looking at everything, that is a part of the process that we're going to do. Now, I know we're throwing a lot at you, John, but when you're looking at this, if it's something that we say, hey, we might need a separate offsite or a separate specific single day meeting to go over this stuff, or a multi-day meeting, or whatever the case is, then don't be afraid of that. If that's what we have to do. These are big questions and big issues, and I'm in the items for staff review. I have, I think, clarity on this conversation that can give some direction to staff to bring it back to us. But at the end of the day, I do think we shouldn't be afraid of the questions. We shouldn't be afraid. We should listen to the fact that we have trustees that are concerned about it. And this is my second meeting back on the Board of Investment after being off for 3 years. So I don't officially have an opinion on it. But I do think that that staff is being tasked and our consultants being tasked with taking a good fresh look at this and bringing it back. And I do agree, fiduciary council involvement, absolutely. Consultant, best practices, all of that. I'm not saying that we put together a 120-page, executive summary that you bring back to this board. That might be the end result, but I do think that an initial analysis is warranted, and then let's have a conversation about what we're seeing. So I think a high-level overview, look at it, let's take a look and go from there. And I'm not suggesting the best way if we're going to do that at the offsite, if we're going to do a separate, targeted offsite, or a separate board meeting, or maybe one board meeting focused on the issue, whatever the case. I'll let you, John, take a look at it and kind of come up with some thoughts on it. So those were my thoughts.
Would it be helpful to see the report referenced previously first? So you could, because a lot of these conversations, I'm sure, were the exact same conversations that went on in 2020, 2021. So it might be helpful.
Yes, absolutely.
Yeah. So if staff, I'm not sure if that's a Steve Royce thing or 10 thing, whatever, but if we could see, I remember the presentation because I was kind of brand spanking new, but it might be nice to see whatever that summary report does from that.
If it's okay, Mr. Chair, I believe was it November 24? Was that the presentation? And we can.
The final presentation.
Yeah.
Yeah.
So that we can recirculate.
I guess the only question for my fellow trustees, but also I don't want us to lose out on great deals because we're slowing down the process. I'm very cognizant of that. I'm also cognizant of the amount of time it takes to prepare something like this. So I guess we definitely need to talk through and address all concerns. I want, for me, personally, I would rather have staff going out making us more money. That's my druthers. And then I would also want to see what in the process is wrong that we couldn't check already. Because I think what I just heard was a best in class, and from my time in private equity, this is a best in class process. So if there's something that could be fixed or tweaked or something, that might be an easier first step, as opposed to going all the way back to the other side and going back and forth in the big swings. Because the concerns are real, but also we just heard DDA doing a great job with co-investments. If he's doing a great job with co-investments and he can't get a deal done because we have to wait to come back here and something goes really quick, that would suck, right? So from a fiduciary standpoint for our beneficiaries, I also want to keep that point in mind as well.
Yeah. And I don't think anybody's directing staff to kind of slow down on their day job, right? So keep the day job going, keep the process in place. We're just asking questions, and I think we're taking a look and seeing where we are today and what the greater picture is. So, okay. I believe that covers this presentation. I'll have some, I think, clarity in the staff review comments, but we have reports item B through I that are all information only. Is there any questions from any trustees on those items? Hearing none, we're moving on to the items for staff review. And Linda, I'll be kind. I won't make you summarize it. I'll summarize it for you. So we would like to direct staff to review and analyze the private equity evaluation process as it relates to trustee oversight and come back to the board with a analysis. And then we would also like the board to report back on the evaluation process as it's written. So the policy of the evaluation process. There was the question about, is this written down, all these steps written down? So if you can report back to us on if we do have a written policy on everything that was presented. Those are the two items for staff. Next, items for future agendas. Any requests from trustees to add items to the agenda? I hear none. Now go to the order. Linda, can you take
Sure. Ms. Ginsburg? Ms. Mee?
I do like to share, last week I attended a conference, Pension Bridge Private Equity in San Diego. It was a great conference that I learned so much. So private credit, the environment has been changed like substantially in the past few years, and now this year, and then the talks like almost like 180-degree differences, right? From the beginning in 2008, when the bank doesn't do as much more regulation, then it gives the opportunity for private equity to grow, and then high interest rate environment, and then allow it continue to thrive, and we have like exceptional performance, right? And then until this year, that concerns start to rise when the supply of capital is increasing, the inflow to the area, of the capitals much more than the supply opportunities. And then there's Jamie Dimon's comment on cockroach in the private credit. So that conference I learned a lot, and that give me inspiration that I want to understand a portfolio more in private credit. So I have scheduled meeting and talk to Russia sometime. So I just want to share, this a great conference I attend.
Thank you. Mr. Fay?
I believe last week we said welcome to Louis, the BOR, but also welcome as no longer acting CEO on the BOI. That's all.
Thank you. Ms. Martin?
I'm good. Thank you.
Thank you. Mr. Gatto?
I don't have anything. Thank you, Madam Secretary.
Mr. Jones?
Nothing.
Thank you. John?
Sorry, I'm just collecting my thoughts. This is a really rough meeting. Yeah, so I'll say it's a really rough meeting. I think that this investment organization is 1,000% different than what it was. And I think the best part of it isn't me, is the colleagues, that it's just, in some sense, there's more engagement and more dimensions. Decisions are more thoughtful than ever. Yeah, it's just tough day, but really tough day. With that said, I want to thank everyone, the investment team, for making us what we are today, not what we were, because it is only looking forward. And I hope that the future isn't the past. But with that, I want to welcome two people to the team. The first is Kunal Gawande. Kunal joins us as a senior investment analyst in our credit and risk mitigation team. He has a fantastic background, both undergrad and a graduate degree. He is level 3 for CFA. So he's studying to finish that. And his background prior to joining us, investment banking, as well as valuation in asset management space. And I think that that's really important, given Ms. Mee's last comment about credit, about valuation, about cockroaches. I think understanding fundamentally the value of what we have is the most important thing to help us pay benefits. So welcome aboard, Kunal. We're better because of you. Normally I do this with a smile. I can't today. The second person I'd like to welcome is Tolkien Takashova. Tolkien has a fantastic background. She joins our portfolio analytics team also as an FA2 or senior investment analyst. She completed her CFA, so she is a charter holder, has one of the more interesting backgrounds. Everyone's background is obviously very interesting, but she has extensive experience working for the Kazakhstani Sovereign Wealth Fund. So I think that Tolkien may be the first person on our team who has actually worked at a sovereign wealth fund, and I encourage everyone to talk to her and everyone else on the team. Very interesting background, and I think that both Kunal and Tolkien show, in terms of their paths to get here, tremendous amount of grit. And I think that grit is the most important thing that positions us to really excel. So thank you.
Great. Again, we're still at morning. So again, good morning, trustees. Just want to share some comments just in my perspective in the seat I have as a CEO of the organization. And one of the things and one of the major responsibilities is talent management, attract, retain, and develop top talent. And appreciate the discussion with respect to the process to the delegated authority. I think trustees have certainly fiduciary responsibilities, but one of the things we communicate to all of our staff, we all have a stake in terms of fiduciary responsibility. So I know John wouldn't state this. I'll state it from again where I sit. Is as far as the process, I agree. We want to make sure we're transparent. We question our processes, but we also want to be sensitive to the fact that we're trying to build a best-in-class investment organization where we can attract and retain the top talent that we have. And there's certainly not a this is not a coincidence as you look at the talent that John and his team have brought on board, and the professionalism and thoroughness that they work through within the investment office, that we have folks staying and actually being promoted. So that's one of the things in terms of as we look at this discussion, that's the deliberative discussion around process and how we can make sure that the trustees feel engaged. That's certainly top of mind for me in terms of retaining top talent. And the top talent is, again, he won't say it, but our chief investment officer. Obviously, the organization isn't relied on one individual, but I think we can all agree his tenure here has been absolutely transformational. So again, from my seat that I sit in, I just wanted to share those words with trustees.
Thank you. And Chair Kehoe.
Thank you. Mr. Gardner, Mr. Gatto, and Ms. Martin, hope you feel better. I'll say, I'll repeat two things that I said that I stand by for this meeting. I think that was an excellent presentation, and it brings me great comfort in the process. I mean, it was very informative to me, and it shows that we're doing everything that I feel that we should be doing to get to the right spot and make good decisions. And the other thing too is that we as an organization should never be afraid of tough questions, and that's what makes us stronger, right? So you bang your knee and it heals up and it's stronger the next time around. So these type of conversations are healthy, and I'm not afraid of them, and we should have them. But I think it's going to show that we're doing best in class, and maybe there's things to tweak along the way, but that's ultimately the point of asking questions and getting to the right spot. So I think this is healthy, and I think that it'll only make us stronger as an organization. That being said, let's go ahead and take a 15-minute break, and then we'll come back into executive session.